This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The Russian Economy Ministry has downgraded its forecasts for the country's crude oil export prices for the next 3 years to $65 per barrel, according to an updated outlook seen by Reuters on Tuesday. The forecasts, used to compile the federal budget, were cut from previous estimates of $71.30 per barrel for 2024, $70.10 for 2025 and $70 for 2026. Russia has faced myriad sanctions from the West over the conflict in Ukraine, including restrictions on Russian oil purchases as well as a price cap of $60 per barrel.
Oil prices extended gains on Wednesday after industry data showed a surprise drop in U.S. crude stocks last week, a positive sign for demand, though markets were also keeping a close eye on hostilities in the Middle East. Brent crude futures rose 26 cents, or 0.29%, to $88.68 a barrel, and U.S. West Texas Intermediate crude futures climbed 26 cents, or 0.31%, to $83.62 a barrel at 0634 GMT. U.S. crude inventories fell 3.237 million barrels in the week ended April 19, according to market sources citing American Petroleum Institute figures. In contrast, 6 analysts polled by Reuters had expected a rise of 800,000 barrels.
Moving on to the top news in the energy sector.
Japan's utilities are on track to boost clean electricity output to the highest levels in several years in 2024, after recording a 12.4% rise in clean power output over the first 2 months from the same period in 2023. Clean electricity output during January and February totaled 52.67 terawatt-hours, TWh, according to energy think tank Ember, the highest for that period in at least 5 years. Japan's power firms also cut fossil fuel-based generation over the opening 2 months of the year by 6% from the year before, to the lowest since 2019.
Europe has successfully survived the worst energy crisis in decades thanks to demand reduction and a couple of mild winters, but the continent's ability to survive a cold winter hasn't been tested yet, senior energy executives said on Tuesday. Executives from top energy firms including France's Total Energies and Germany's RWE said during talks at the Europe Flame Gas and LNG conference in Amsterdam that in addition to the temperature, major risks next winter would include a pickup in Chinese demand and supply outages. EU nations have raced to replace Russian fuel following Moscow's invasion of Ukraine in 2022, and LNG imports have been instrumental in replacing a substantial share of Russian gas pipeline supplies. Next, we have the top news in metal markets. Gold prices crept higher on Wednesday but were stuck in a narrow range as investors look to U.S. economic data for further clarity on the Federal Reserve's interest rate path. Spot gold rose 0.2% to $2,325.23 per ounce by 0634 GMT, after having hit its lowest since April 5 in the previous session. U.S. gold futures fell 0.2% at $2,338. A false break of $2,300 on Tuesday likely means that gold prices will remain range-bound heading into U.S. inflation data and the BOJ meeting. I expect gold to tread water between $2,300 and $2,350 unless a fresh catalyst arrives, Citi Index senior analyst Matt Simpson said.
Iron ore futures prices rebounded on Wednesday to their highest level in over 6 weeks, aided by renewed hopes of improved steel demand in top consumer China and expectations of lower supply after a major miner lowered its annual shipment outlook. The most traded September iron ore contract on China's Dalian Commodity Exchange ended morning trade 2.55% higher at 883 yuan and 50 fen, $121.94 a metric ton, its highest since March 8. It fell more than 1.5% on Tuesday. The benchmark May iron ore on the Singapore Exchange climbed 4.54% to $117.90 a ton, as of 0332 GMT, the highest since March 7.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose for a third consecutive session on Wednesday amid hotter weather in the key producing country and strength in rival oils, although a stronger ringgit capped gains. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange was up 5 ringgit, or 0.13%, at 3,976 ringgit a metric ton by the midday break. Palm oil followed bullish momentum in CBOT soy oil futures overnight and in Chinese vegetable oil futures in Asian hours on Wednesday, said Anil Kumar Bagani, research head at Mumbai-based vegetable oil broker Sunvan Group. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.